Yeah, hello everyone. Now, this is a market structure analysis from the basis. So, I welcome you to my class. So, I thought of giving all of us Forex knowledge, starting from the basics. Okay, starting from the basics, just in boxing. In boxing, you start from the basics, the jabbing, the defense, leg movement, you know. Even as you become a professional boxer, you still need the basics, which I've just said, jabbing, defense, your leg works, everything is important. Okay, so starting from basics in Forex, you should be able to identify basic swings, market structure, market bias easily without stress. Okay, so that's the point. So right now, here I have a identification of basic swings on market structure, range, and market bias. So, from the diagram I have here, I have, you know, I have a downtrend. This is downtrend. This is uptrend. Okay, this is a downtrend. So this is a downtrend. A downtrend. Why is it doing like that? Downtrend, and this is a uptrend. And this is uptrend. So from this downtrend. So if you're talking about the basic swings, the basic swings on downtrend, we have a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. One. This is a high. This is a high, yeah. Low. Lower, lower high. Lower, lower low. This is a lower low, lower low, lower low. You know. And this is also lower high, lower high, lower high. So why did you say this is a lower high, this is a lower high, this is a lower high? These are lower high because this low is lower than this high. 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 That's why we say lower, lower high, lower high, lower high. Okay. So from this side we have a lower low. This low is lower than this low. lower low, this low is lower than this low, lower low, this low is lower than this low. So these are the basic swings on downtrend. Now let's do uptrend. So right now we have a uptrend here. Okay, this is our uptrend here. Uptrend here. So from uptrend we have low, then we have high, high, then we have a higher low, then we have higher low. Okay, this is our low, this is our high, this is a higher low, and this is our higher high here. Higher high, higher high. Okay, now we have this higher low, higher low, higher low. Trend downtrend. So why do you say this is a higher low? Okay, so in forex trading, when market is bullish, you do high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Why is this one higher high? It is higher high because this high here is higher than the previous high. It is higher high here because this high here is higher than the previous high. It is higher high here because this high here is higher than the previous high. Likewise, this place, it is higher low here because the low here is higher than the previous low. This higher low here because this low here is higher than the previous low. Likewise, in the order. Okay, in the order. So from our topic, we have a range. So how do we identify range? So when you have a, for example, from our bullish side, how it is. So how do we identify range? This is how we identify range. Higher, 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 high. Normally, this is a breakout structure here. This is a breakout structure here. Structure is broken when you have something like this. And these three movements, 1, 2, 3, makes a range. 1, 2, 3 makes a range. So that is a range. So if you are going to identify current range here, this is our current range. 1, 2, 3. This is our current range here. Okay, because this breakout this structure. Okay, so this is what makes a range. So what do we need from this three structures? Okay, we need this part. We need this part as our range. We need this part as our range because as market has broken the structure, we'll be expecting pullback. We'll be expecting retracement. Okay, we'll be expecting retracement in this form. Okay, you see market retracing back, until it breaks this, until it change character, breaks this one. Okay, come this way, then continue. Okay, so we are going to go deeper in the next topic. Okay, or in the topic in future. Okay, because right now all of these are internal structures and these also are external structures. So we talk better on that later in future. Okay, so don't forget, this is our range. This is our range. So immediately you see structure being broken upside, then coming down. This is, you only need current range in the market. Okay, this current range. Okay, so here we go. So we've talked about the swings. So if you're trading, even as a professional, learn how to identify your swings. Just like a, a kindergarten child who can identify alphabets. Take your time, be relaxed, because market doesn't joke. Take your time. You know, all these ones are lines now. I will open the real chart. It's going to take your time to identify the swings, okay? Because it's very important. You have to understand the swings, okay? If you understand the swings, you'll be able to identify the bias. So the bias right now is uptrend. The bias is either uptrend, downtrend, or what is it called, consolidating. Okay. So the three natures of market, is a downtrend, uptrend, and our next one now is a consolidation. Okay. This one now is consolidation. Consolidation. So consolidation is always the sideways market. Sideways market. So this is what we have, a sideways market. Okay. And the market is not going up, it's not going down. Okay. When you see something like this, the market is shabby, it's just going sideways, no clear movement, not uptrend, not downtrend. Yeah? All you see is just sideways market. Okay, when you see market like this, so as a beginner, just avoid it. Okay, just avoid it. Where you have series of highs, and you have series of lows. Okay, you have a series of highs, series of lows, results, and low. You have a series of highs, high, series of highs, series of lows. Just want to, no, I don't want to waste our time. I just want to identify, label just three, label just three out of it. Okay, I'm supposed to label all. I just want to label just three of it. So everything here is just highs, everything here is just lows. Okay, so this kind of market, avoid, avoid this kind of market. Avoid this kind of structure. Let's see, you know, let's say beginner. Avoid that kind of structure. Okay, so currently right now, these are our swings. These are the basics. These are uptrends. Okay, now these simple things. Now let us go into ray chart and identify everything. So from our ray chart here, this is today's market. Okay, I'm not in yet. So you can identify uptrend here, downtrend. So from here, so I'm on 30-minute time frame right now. So from this 30-minute time frame, so from what I taught us, this is a low. From here, I, I, you know, I, lower low, lower high, you know, lower low, lower high, lower low, you know. This is what we have. You know, from here, this is a high, you know, lower high, lower low, lower high, lower low, you know, in that order, like what I said from the beginning. Okay, so that is how to identify, you know, downtrend. Okay, so you can see again, high, low, you know, this is a lower high, lower low, lower high, lower low, lower high, lower low. Okay, so in future, I'll still I'll still teach you how to understand identify pullback. Pullback is very, very important because I know you saw me marking it out and you'll be surprised I didn't mark this area. I didn't mark this area. Okay. This is not a pullback. This is not a pullback. This is not a pullback. Okay. I will teach you because this is not a pullback. This is a inside bar. All of this is inside bar. So from here down to this place, one leg. A single leg like this. It's not a pullback. So you probably expecting me to say, you probably expecting me to say, you know, something like this, you know, to do something like this, or do something like this, and do something like no. That is wrong. Okay, that is wrong. So in the next class, we'll talk about it. Probably the concept 3 or concept 2. Okay, so let me quickly check for another downtrend. Okay, another downtrend. Another downtrend. Let's go to 4 hour. Go to 4 hour quickly. Go to 4 hour quickly. Then we can easily identify. The network is crazy. Can you bear with me? The network is crazy. Okay, we have the 4 hours there. I'm trying to identify. I'm trying to look for downtrend. Okay, I'm trying to look for that. Okay, before we look for downtrend, okay, let's quickly identify uptrend. Then let's identify uptrend from here. Okay, this is a uptrend. From here, we have this low, we have this high, higher low, higher high, higher low, higher high, higher low, you know, higher high. Okay, can you see? So from where we started our class from. Okay, this is low, this is high, this is higher low, higher high, higher low, higher high, higher low, higher high. So you see the same thing. So you can see when we draw lines. So when we draw lines, you can easily see them. But from real charts now, that is where the problem is for most traders. Okay, you have to train your eyes to identify swings. You know, you have to train your eyes to identify swings from the market. Okay, so it's still the same thing. So those are the basics. So those are the basics in Forex, which we must be very, very careful with. So you can see. So you can see the couple of it. This is a low, high, lower low, lower high, lower low, lower high, lower low, lower high. Can you see? It keeps going up. It keeps breaking structure to the upside. You know. So the simple definition of an uptrend is when price keep breaking structure to the upside. You know, you got here, it broke the structure. This is a resistance. It's a resistance. It keeps breaking resistance to the upside. Okay. So that's the simple definition of what is it called? Of an uptrend. Then downtrend. The simple definition of downtrend is when price keeps breaking structure to the downside. In otherwise, when price keeps breaking support to the downside. Okay. price keep breaking support to the downside. And this is another downtrend structures here, you see, can you see, can you see, you know, this is another downtrend. That's another downtrend there, you see, keeps breaking support, keeps breaking support, in the order. So that's a downtrend for us. Are you getting it? So far so good. I believe we've been able to do 205-hour swings, 205 reconstruction, and 205 range. Okay. Now currently this is a good. This is good on 4 hour. Okay. This is good on 4 hour. Now let me do something now. On 4 hours, how do we identify the current range? Okay. We can identify the swings. Let's identify the current range. Right now, the swings start from there. It was uptrend from here. Okay, price was uptrend from here and keeps going. Then we have this. It's supposed to just come into this discount area, this demand area, then keeps buying. But it didn't do that. Remember, in Forex, this is a protected low. This low is supposed to be protected. It must not be breaking. If otherwise it's being broken, then we are changing the bias. That means the market wants to change from uptrend to downtrend, but eventually it got broken. Okay, now we have this low here, and we have this high, and now we have a new lower low now. Okay, so now how do we identify our current range that I want to work with? Okay, our current range you want to work with. So currently this will be our current range we want to work with. Why? Because structure has been broken, support has been broken to the downside. And you see, it has been broken to the downside, support has been broken to the downside. So what's the next thing for me to do? Then I will bring my what is it called? I'll bring my Fibonacci. Can you see? Bring my Fibonacci. So price is buying on, going to buy to this premium zone, which is a supply zone, and change character. When it change character, I'll switch to 30-minute change character, then it starts selling. Okay, then it starts selling again to break the next demand level, to break the next support level. Are you getting it? So otherwise we keep following the market. Keep following the market. Okay, so the number one thing is identify your swings. When you identify your swings, then number two, then identify your current range. Okay, of course, when you identify your swings, you will know your bias. So the swings is going to tell you if it's uptrend or downtrend. Okay, so currently gold is technically downtrend. Okay, gold is technically downtrend. So from there, so the next thing now is we know the bias, we know the swings, we know the current range. This is the current range. So as a trader now, on 4 hours, we don't have anything to do with this one. Currently, we don't have anything to do with this one. All we need is this current range here. All we need is this current range here. Okay, this is 4 hour. We are need for our current range. 4 hour is telling us sell. Okay, so right now, if you go to 30 minutes, from our 30 minutes, price is buying on. So we expect it to buy, to keep buying into, 4 hours, 4 hours zone, 4 hours supply zone. Okay, supply zone. So right now, on 30 minutes, we are seeing short time sell. So we keep waiting and see what market will do. Okay. Obviously, we expect market to buy to this zone. Okay. So all of this is going to be short time. Short term sell, short term sell. So the rating we are expecting is to buy to this level, then sell off. Okay, just in this manner. Just in this manner. Buy, you buy then buy from here. Something in this form. Okay, something in this one. Then probably change character, then sell off. Okay. So, but we keep following the market. We let the market lead. We don't lead the market because this change character might not happen. Okay. Price might keep buying and keep buying, then break this one and keep going upward. So that's why it's good to follow the market. Okay. So that is just the point. I think so far so good. I don't want to bore us too much or too long. So far so good. We've learned the swings. We've learned the buyers. The swings are high, low, high, high, and not. Those are the swings. Okay. So the buyers now, we've learned the swings. So swings on market structure. Then we've learned the range. The range. Then we've learned the market buyers. The market buyers on here is downtrend. Here is uptrend. And I also told us about consolidation, where you have a series of highs, series of lows. As a beginner, just avoid it. Just avoid it, okay? If you like yourself. Then I also talked us about the range. Range. Yeah, I said when you have a structure newly broken, when structure is newly broken, you will be expecting a retracement back into the zone, okay? Be it supply zone or demand zone, you know, as the case may be. Then you'll be expecting change of character. Then you see price do this. Then you see price do this. Then, okay. So before the next breakout will happen, this is what we call range. Current range. All you need is the current range. Okay. How do you identify the current range? Immediately structure is broken. Immediately structure is broken. Then you have a range, and this is your range here. This is your range here. Then you are expecting market to come back as a retracement. Okay. And then after retracement, as you are expecting market to come back for retracement into the zone, then from the zone you identify your order block. Okay. Order block here. Identify your order block, then you can bring your shadow this way. Bring your shadow, okay. You bring your shadow this way, then that is how you prepare yourself for entry. Okay, if this is 4 hour, then you have to go back to 30 minutes for entry. Okay, 30 minutes. Some people use 50 minutes, some people use 5 minutes. Anyway, so as you are growing in the industry, as you are growing in the business, over time you will know what is best for you. Okay, by my experience, I like 30 minutes. Okay, so far so good. I want to say thank you. This is a concept one on my microstructure analysis from the basics, concept one. So the next class we'll be going to talk about our concept two. Okay, thank you so much. Love you. Don't forget to subscribe. Make a comment. Whatever is your opinion. Okay, don't hesitate to drop your comments in the comment section. God bless you.